Good afternoon, traders. This is Bill Baruch with Blue Line Futures, and it's your midday market minute. A lot of news this morning. First, non-farm payroll. It missed expectations. The headline job read 155,000, lower than the 200 expected. Then you got average hourly earnings only picking up 0.2, below that 0.3 expected. So equity markets, they rallied. They like the news. This is typically the type of report that equity markets want to see. Moved up to 2709 in the S&P. This was our second wave of major 3-star resistance, and it could not get out above there. Remember, this is a level we've talked about in the Morning Express for the last couple of days, that if it gets out above there, then it's going to neutralize that weakness that we saw going back to Tuesday. To the downside, you can start to see the selling pick up here, and really feels like buyer strikes. You know, when this market just starts moving lower, no one really wants to step in and try and pick that bottom out. And then today, though, it didn't accelerate in the manner we've seen earlier in the week. The NASDAQ, which has been very constructive, we noted that in the Morning Express, or constructive relative to the other indices is a better way of putting that. It has not taken that Thanksgiving Day low out, and in fact, it's building a trend line going back to that October low, and it held that here at 66.50. The markets are starting to move up here as I'm talking right now, and you're getting a little bit of a tailwind. What you really want to see ultimately at a bare minimum today, the S&P, you got to get that thing closing out above about 26.55 area, and otherwise it's going to be really susceptible to further waves of selling into the close and on Sunday night. But really, again, you want to get that thing out above about 26.70 to keep this, that overnight low, to keep this sort of weakness neutralized. Moving on to crude oil, we got the cut. The official announcement really hasn't been out yet, but you got a 1.2 million barrel cut overall from OPEC and non-OPEC. And what we're also seeing too is that cooperation. I think that's a really big key here. Is there was a lot of fear that there wasn't going to be a cooperation. So you take that cooperation, they came together, you couple that with the domestic inventory draw yesterday, that surprised 7 million barrel draw, and you get a little bit of a move higher in crude. Now, this isn't the full 1.3 million barrel cut that we talked about earlier in the week, but it is productive here, and the market is moving higher. Still got a major 3-star resistance above in crude oil. It's going to be a tough one to get out above, but if it does, you could start to see this thing run a little bit, another $2. So keep an eye on things, but you don't want to, you got to be careful. If it does fail here one more time, we could see that quickly go lower. Again, we're still working through a bottoming process. There's going to be a lot of emphasis put on next week's inventory data to follow that draw up. And then lastly with gold, this poor report, non-farm payroll, picked gold up. Of course, we're at 1250. This is where we have major 3-star resistance, 1250 to 1252. It's not where you want to be buying gold. It's where you want to be selling gold. So be patient here. Now look at from the other side of it. The dollar index shot lower on that non-farm payroll number. It's pared its losses. The Chinese yuan was down as much as 1.75% on the week. The Chinese yuan had strengthened 1.75% on the week against the dollar at its highest level. But that's pared it down to about 1%. And then treasuries, the curve is steepening today. So this is not really what you want to see for gold to extend gains, because the bonds are actually in the red on that. So don't feel like you're missing something. Wait for a pullback in gold as your buying opportunity. Give us a call here. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.